Okay, hello everyone. It's Michael Valtos from Orderflows.com here, and I'm going to talk about my Orderflows trade analysis and recap from February 3rd, 2017. First, a brief disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Before we jump in, the tools that I use in this presentation are the Orderflows Trader software, the Valtos Flip, and the Valtos Transition. The Valtos Flip and the Transition are 2 out of the 3 indicators I just released recently, and they're included when you buy the Orderflows Trader software. However, some people are buying them separately and using them on normal bar charts, and what I'll be talking about today is how they look on normal bar charts. So let's jump in. Okay, so first, I'll talk about the transition, the Valtos transition. This is a mini Dow 100 tick chart. Now, 7:30, you had the non-farm payroll numbers came out, so that's not a time when you're looking to be trading right ahead of it or immediately after it. There were some sells, right on the number, right ahead of the number. Again, be realistic. You're not going to be trading anything right on the release of probably the biggest economic number of the month. So, realistically for mini Dow or, mini S&Ps for that case, you should really be looking at what's doing when the cash opens. That's when that's when the majority of the volume is going to occur. I'm not going to say all the volume, but, it does trade pretty much around the clock. So there is, maybe about 20 to 30% of the volume is traded up until the cash open. But once the cash opens, the market's going to do what it wants to do. And, again, I don't normally trade on non-farm payroll day, but, I was in front of my computer for a little while and I took a couple trades. Now, real quick around 9 o'clock, there was a quick sell followed by a quick buy, another buy. Okay, so, this one, it worked out a little bit. This one worked out. This one worked out. Now, you're trading a 100 tick chart and, you're not going to be looking to hold the trade for 30 minutes, an hour. You're trading on a short time frame. You have to have a short time frame outlook. It's not something you're going to be holding for a long time. There's another buy here. So, we're getting quite a few buy signals here. And the market, was bumping up, at this time, these were the highs of the day. And, we came up here, made a new high at 70, got above 70. And there was a buy signal here. So, it followed up several buys, 1, 2, 3. The market looked like it was ready to pop and go higher. I got long. I bought 5 at 72, traded up to 80. Okay, came back down, got down, I believe it was 68. Another buy signal kicked off. So I went ahead, I got long. I bought another 5 at 71. So I'm long, average 71.5, 5 at 71, 5 at 72. And then we traded up to, again, around the 78 level, came back off, and then got a sell signal. And I thought, shit. So I threw in a couple offers here at 75 and 76, and I ended up covering the other 5 lots. I moved it down to 5. So, it wasn't the greatest trade in the world. It was basically 3.5 ticks, but, 3.5 ticks, it added up to about $175. The market did go higher. Again, I got the sell signal. So to me, it was a sign, hey, try and get out with something, with a small profit. I did think it could pop back up a little bit. I wasn't just ready to capitulate and get out, even though the market really wasn't that much against me. I figured, we can pop back up to around 75, 76, 77. So, I threw in my offers at 5 and 6, 75, 76, and even the 6s I moved down to 5. And then it just shot straight up, and then we made this high up here just below 20,000, and it gave a nice sell signal. This one I didn't take. Actually, I don't normally trade on this day, but I said I felt pretty confident we're going to go a little bit higher, and we did. And we did. So this one, it just went sideways on you, but this one. Again, I was looking at it and sort of kind of pissed off that I didn't take it, and it just proceeded. It was a nice quick sell off here. It bounced down here to 60 before bouncing back up. Another one which basically went sideways. This one here basically went sideways. The afternoon. We did rally a bit later, but there wasn't any decent buy signals there. And again, this is 3 o'clock. You shouldn't be looking to trade at 3 o'clock. So, it wasn't, necessarily a lot of signals, but I saw, I saw it kept giving these buy signals, and it really looked like everyone was sort of rushing into the market to want to take it higher. That's why I got in. I looked for a quick trade. I said again, it's not a day that I normally trade. Everybody that knows me. I just usually take the day off, but I'm back in the U.S., so my trading times are a bit differently, and I just happen to be there. And this is one. I get some buy signals. One, boom, boom, and it's just all setting up for a nice move higher. So I took them. Okay, so now this chart. This is a mini Dow YM. Again, this is a 10 range chart, and this is a different indicator. This is the flip. I just want to talk about it. Again, because people have been getting these indicators, and they're not necessarily knowing how to, what to look for, and you have to define what market you're trading, what time frame. Different indicators that I release, are generally for different, different time frames, and the flip is looking for areas where the market could possibly be changing. And here, okay, 7:30. This is right after the number. Again, you're not going to be looking to trade at that time. A bit later, 8:20. You get a nice buy signal, and this one, what did the market do? It just went straight up. This was those trades that I took. I mean, there's nothing else in there. Late in the day, you get a sell signal. One of the problems is, sometimes people, they trade on these time frames, and they're just not sure of what they're doing. Understand the time frame you're trading and what to expect from that time frame. I mean, if you're trading a 10 range chart, you should be looking at the immediate term, especially a 10 range chart on the Dow. Dow, you could have 200 points moves in a day. I'm not necessarily looking to buy it here at 8:20 and hold it all the way to the close on a 10 range chart. I mean, you can. I mean, if it's always in your favor, never really goes against you. It did come down here a little bit, against you by a few ticks. You'd be getting long somewhere in here. What is that, 915? We got down to 900. Looks like before, turning around and just going straight up all day. But realistically, if you're trading a 10 range chart and just goes up in the first bar, second bar, and then the third bar continues up, you should be happy getting 20 or 30 ticks out of the trade. I know some people, they just want to buy it here and expect to hold it all day, but you really can't. I mean, you would like to. I mean, if it's just always moving in that direction, but sometimes you can only get what the market's going to give you. If you're getting long here, you should be looking to trail your stop in case it starts moving down against you. So if you're long in here, then boom, we keep going up, up, up. You should be looking to trail your stop somewhere in here. Don't let it come down all the way down here, below these levels here to stop you out and then make the move back up. That's one of the problems that traders make, is they expect either the trade to go to their profit target or stop them out. If the trade starts turning, and conditions change, like here, he's giving you this buy, and we go from what is that, 910 up to 920 up to 930. All of a sudden we're trading back down at 920. Hey, we're moving in the wrong direction. You should think about get out at a scratch at the worst. Don't let it come all the way down to 900 and stop you out, then make the move. It's better to get a little bit of something than a lot of nothing. That's if I got a lesson for today, that's the lesson. Okay, I'll show you another chart. This is the transition. This is on a euro currency 1 minute chart. Now again, around 7:30, you're not going to be looking to trade. Usually, for me, I give this number about 15 minutes to work itself out and let the market sort of come back to a normal, normal trading again. So, you get the big spike up, down, and then you can see around 7:45, it starts going sideways again. So, everyone's sort of worked out what they're going to do after they react to the number. I mean, you can give it a half hour if you want. If you got the balls, and you like to trade around the volatility, go ahead. Me, I like to trade on the less volatile times. But anyway, at call it 7:52 here, I did give a buy. This is the transition, and it made a nice move up, from the 60 area up to the 90s before sort of stabilizing and coming off again. For some people, this might be a little bit too close to when the number came out, but again, it's a personal decision. Then you get down into this area here, give a buy, and it just turned around on you, stopped you out immediately. Sometimes that happens. you don't know when a big trade is going to come into the market. We're going sideways to lower here, and then boom, we just get slammed down before we find this area down here where, again, you're talking at 76, 107, 76 area, 75, you'd be getting long. You'd pull down into 72, so that's 3 full ticks in the euro currency. But then, again, you're not going to just have such a tight stop of 1 tick. We all like to have tight stops, right? But I mean, be realistic. You got to give a trade a little bit of room to stop you out, or to make its move. So if you're using maybe a 5 tick stop, 5 full ticks, you're safe. Here, yeah, you would have taken the loss, but then look, you're getting long around the 75 area, 76 area. And what's it do? It just it comes up, comes back down again. If you're trailing your stop, maybe you would have got out a little premature, but then it keeps making this move higher. Get another buy signal here again. I'm not sure I would be looking to take these. I like to get them after moves lower, not sort of in the moves, as we're going higher. But these definitely, this one again probably would have stopped you out as soon as you get short. It comes back up here, makes a new swing high, and then the sell-off happens. And it trades, directly, from what we want to call this 108, 003, 04. Nice 10 tick move down to 107.94. Before just sort of going sideways. So you could have got something out of it. This one did go up. Again, if you're trailing your stop, you could have got a little bit of something out of it before it turned around. It's not the biggest move, but it's a move up. And you can't get 100 points when the market's only going to move 6 points. But again, there's people, they get these indicators, put them on, see this move, but they get long in here, then they're holding it all the way till down here. I mean, for what? At this point, you should be able to recognize by now that the move is not happening. It gave you this nice buy signal on a swing low, and it's going up, 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 but then it just sort of starts going sideways and starts turning down. To still be in this trade, especially when you're below, the low of this swing low here, really makes absolutely zero sense. You should not still be in this trade. I mean, you should be trailing your stop if you're getting out. Get out somewhere up here before it starts turning into a loser. But definitely don't get out of that trade at a loss, because I mean that's you should reassess your trading if you're constantly taking losses like that, especially after the trade has been in your favor. Then later in the day, 130, 125, just before 130, it's Friday, the market's getting ready to close. I don't know if you'd be interested in taking this. It just sort of goes sideways on you for the next 15 minutes, which is generally a sign that the trade's not working out. You're getting long here at, 107.78, then we can only get up to 79, as low as 76. For the next 10 minutes, you're trading in a, 2-point range. That's a sign that the market's going to go either way. I'm not going to say, yeah, you could have got long here, rode it up to here. No, honestly, if I'm sitting through this churn, I'd be looking to get out at break even and just be done with it and be done with the trading for the day in that market. Because it's already, it's Friday afternoon, 2 o'clock Chicago time. There's not much going to be happening in the euro currency. Although, with Trump in office, there's you never know what's going to come out of Washington that's going to affect the markets. But still, if the market's going sideways on you for 10 minutes straight, you just get out. Don't need to dick around and try and be a hero and try and get something out of nothing. You got just as good chance of it going in your favor as you got of it going against you. Okay, what I want to talk about here is this is a bond trade. And I mean, it's not a trade I took, but it's a setup that I always refer to, and people hear me talking about it till I'm blue in the face. And what it is, it's a order flows divergence followed by a small print, a ratio bounds high, indicating price rejection. And again, you just made a new high here. You're ticking up. You even got a stacked buying imbalance here right on the high, and you think, hey, it could be going higher. But you get this price rejection up here. You got the divergence. This is the price rejector. But nevertheless, you got imbalance, a stacked imbalance split over 2 bars. And then you get a ratio bounds low, 31. It's a blue number, right? I'm always looking for these blue numbers because these are ratios. And you have a divergence with a ratio that I like after it. And to me, that's all signs go. You got the negative deltas, and we make a nice move from the 150, 101 area down to 150.24. It just sort of goes sideways. It hits there, comes back down again to 25. But once you start seeing 3 point of controls lining up, again, that's a sign of a market that's sort of going sideways. After 1, 2 in a row, I'd sort of be looking for possibly a third one, or a market just just rotating around this previous bar. So being short in here, you're getting some signs of sideways activity here. Again, it's a sign to get out. It's not the best trade in terms of return, but if you get short at 00 or 01 even, a move down to 25, this is 27, 26, if you get out below 28, that'd be decent. That's 4 or 5 ticks. Then later, we did come down here, hit the price rejector, then rally. But I'm not going to say I would have taken that. But then again, up here we get something very similar. We've got the divergence, this down arrow. You got our ratio bounds low here, and then even in the bar afterwards, you've got a single print. You've got a ratio bounds high, so you got 2 ratios in a row right on the divergence. Now here you don't have a ratio. In fact, in the next bar you got a bullish ratio going in the opposite direction. So that's why I'm not so interested in this one. Whereas this one, you've got a ratio in the bar with a divergence, and then you have the ratio afterwards. So again, you don't even need to wait for this bar to get short. You don't need to wait for this bar to finish to get short. With this ratio bounds low here and the divergence, that's a sign enough to be looking to get short. And we do run down into this area down here. So you could be getting shorts, who knows, 02, 03, anywhere in there. And we did trade back up to 03 before continuing on lower. So this high that we had made up here, really, this was a nice one. You've got your divergence, you've got your ratio. In this case, it's a ratio bounds low, indicating some stopping volume up here. You can see, look at this volume, 500, 200, 300. That's some solid volume right up on the high. You even got unfinished business up there. And then again, here you got a sign of price rejection. And what happens? Boom, the market just falls off. You're talking 151. Even in this bar, 151. Okay, what did it do? Trade all the way down. This is a full point. Down to 150. Almost a straight line down there. We hit this low here. Again, we still got that negative delta. You don't have a divergence. It did bounce up off of it going into the close. But you know what? If there was one trade, just one trade you could have taken, on a one lot, that was the trade. That was the one. You don't need to be trading 10 lots as some people will have you believe. If you can just catch one decent trade, you're going to have trades like you saw earlier, right? Previously, you had the one trade, you only got, 4 ticks out of it. Okay, be patient, wait for the next trade. Then boom, you get the exact same setup, or the same concepts behind the setup, the divergence with the ratio afterwards, and then the market sells off a whole point. 1 point in the bonds is, is this $1,000 move? You don't need to be trading 5 lots, 10 lots to be making a lot of money. I said if you could catch a 1 point move, you should be happy just even trading a 1 lot. Okay, so thanks for watching this video. To learn more about the trading software used in this presentation and how you can profit from order flow trading, visit my website, www.orderflows.com. Subscribe to my YouTube channel. I'm trying to put out videos, as often as I can. I'd like to have more on there, and then there will be more coming up. But at least if you subscribe to my channel, when I put a new video out, you'll be alerted to it, and you'll be notified via email that I put a new video out. So, again, thanks. And we want to know any more about order flow, just visit my website. I've got a lot of information on there. I've got free indicators you could even download about that read the order flow for you. So again, thanks for watching this, and hope to see you on the inside.